What's going on with Novo Nordisk's NVO? After some recent price action and a bit of a shakeup in their guidance, everyone's asking, is the bottom in? Dave here, and we're diving deep, peeling back the layers of this pharmaceutical giant to give you the clearest picture possible. All right, let's kick things off with the market narrative. What are people saying about NVO right now? The consensus is that we're seeing a period of recalibrated growth expectations. The hypergrowth phase for their blockbuster GLP-1 drugs, Wegovy and Ozempic, especially in the US, is slowing down a touch. It's not a crash, but more of a normalization after an explosive run. Think less rocket ship, more stable, powerful jet. Now, for the company itself, Novo Nordisk AS, based out of Bagsvær, Denmark, is a global pharmaceutical powerhouse. They operate primarily in two segments: diabetes and obesity care, which is where those famous GLP-1 drugs live, and rare disease. They're not just making the drugs, they're also innovating with smart pens and dose guidance apps. Here's the kicker. Management recently lowered its full-year 2025 outlook for those key GLP-1 drugs in the US and some international markets. That's a big piece of the puzzle we need to factor in. So how do we reconcile this slowing hypergrowth market narrative with the company's official guidance? It's all about expectation management. While growth might not be as explosive as before, NVO is still acquiring a ton of new patients. We're talking 3.5 million new patients in the first half of 2025 compared to the first half of 2024. That tells you demand is still robust, just perhaps not at the breakneck pace we saw initially. We ran 3 scenarios to weigh all these factors. Let's start with our base case. Our base case assumes that Novo Nordisk's revised guidance isn't a disaster, but rather a more realistic and sustainable growth trajectory. Growth is moderating, yes, but they're still expanding their patient base, still leading the market. We started with their current EPS of $3.63, projected next year's EPS with a solid 12% growth rate, reflecting that strong underlying demand and revised guidance, bringing us to $4.65. Then, we applied a PE multiple of 15x. This acknowledges some multiple compression due to the adjusted growth, but still respects their market leadership. That calculates out to a fair value of $60.98. I'm giving this base case a 50% probability. Why? Because while $60.98 represents a moderate breakout from the current $46 to $58 consolidation range, the stock recently broke down from a long-term price channel. That suggests a significant upside beyond the 65 resistance is unlikely without some truly new, powerful catalysts, making this a plausible but not explosive outcome. Next up, the bull case. This scenario assumes the recent lowered outlook was overly conservative, a classic sandbagging move that the company can comfortably exceed. What could drive this? Maybe faster than expected resolution of supply constraints, allowing them to meet that robust demand. Or perhaps successful expansion into new untapped markets, or even positive clinical trial results for pipeline drugs. Under this scenario, we project next year's EPS with an optimistic 15% growth, bringing us to $4.1745. We then apply a higher PE multiple of 17x, reflecting renewed growth optimism. This gives us a fair value of $70.97. However, I'm only assigning a 20% probability to this bull case. The technicals show significant resistance at $65, and for NVO to hit $70.97, it would need to blow past that. Given the recent breakdown from a long-term price channel, that's a big ask. Without a massive new catalyst, it's possible, but not probable in the immediate term. Finally, let's talk about the bear case. This assumes the lowered guidance is just the tip of the iceberg, a precursor to more significant headwinds. This could be intensified competition in the GLP-1 market, greater than expected supply chain issues, faster saturation, or pricing pressures. In this scenario, we use a conservative 6% growth rate for next year's EPS, bringing us to $3.8478. We then apply a lower PE multiple of 12x, reflecting increased risk. This puts our bear case fair value at $46.17. I'm giving this a 30% probability, and here's why the technicals back that up. The stock just broke down from a long-term price channel, and a negative resolution of this current consolidation pattern is a very real risk. Our bear case fair value of $46.17 sits right at the lower end of that current consolidation range, with major supports at $37 and $30 lurking below, making this a distinct possibility. All right, let's pull up the chart and see what the technicals are telling us. Here's what I'm seeing. After the recent breakdown from a long-term price channel, NVO stock is now in a clear consolidation pattern, bouncing between $58 and $46. If it manages to break out above that 58 mark, there is significant resistance waiting at $65. On the flip side, if we see a breakdown below $46, the next major support levels are at $37 and then $30. The chart suggests a cautious stance with clear boundaries for now. So, is the bottom in for NVO? Based on our weighted scenario analysis, where the base case holds the highest probability at 50%, with the bear case at 30% and bull at 20%, my verdict is not definitively. While there's still underlying options, demand and market leadership, the market narrative and technicals suggest a period of recalibrated, more moderate growth. The stock is in a consolidation phase, and the recent breakdown from a long-term channel means we need to approach with caution. The potential downside is real, even if the base case suggests a modest upside. It's a balanced to slightly cautious outlook. If you're looking to dip your toe in, based on our analysis and the technicals, watching the $46 mark, which aligns with our bear case fair value and the bottom of the current consolidation, could be an interesting entry point. Below that, $37 and $30 are your next major support zones to keep an eye on if the consolidation breaks down. For upside potential, you'd want to see a clear break above $58, but be aware of that $65 resistance. And that's our deep dive on NVO. What do you think? Drop a comment below, hit that like button if you found this helpful, and of course, subscribe so you don't miss out on our next episode of Is the Bottom In? Remember, this content is for informational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research and consult with a qualified professional before making any investment decisions. Investing in the stock market involves risk, and you could lose money. Past performance is not indicative of future results.